welcome to the second Many Markets video. Today, I'm T, by the way, and today we are going to be going over, just it's a stream. If you expect this to be like a quick video, or like to the point, it's not. It's going to be kind of wandering, and you can see a bunch of stuff up here. SEC.gov, Bureau of Labor Statistics, Bureau of Economics, some land price stuff in the Wall Street Journal. And we should probably pull up Yahoo Finance. So, yeah, we're just going to be doing sort of general investment research, seeing what looks underpriced. Maybe I'll dig into some stuff, but I don't really know where it's going to go. I'm a little rusty, so if you have resources that you think are good for if you have resources that you think are good for investing or what have you, then I hope you put them in the comments or put them in the chat. This is I don't know, there's a reason I'm doing it in a public-ish forum. So yeah, just a general thing, like stocks are really high right now. I find things, the Dow hits record as stocks cap high flyer quarter. That's a Yahoo Finance thing. That's the front page of Yahoo Finance, and that's sort of like, I find, finding good things to buy is for me difficult. I think historically in a bull market where everything's incredibly high, I feel like there's a lot of noise in the room, and I do have specific things that I look at, but I'm kind of forgetting those this market round, so I'm trying to remember what they are. I guess you sort of just want to, where's the bubble? That's one game. What are things that are getting overlooked? I think like when we look at let's see, what companies are in the Dow Jones? I think it's easy to just look at maybe what's not getting enough attention by looking at what is getting a lot of attention. So I don't really know the Dow. I know the S&P more. And so I'll probably pull that up here in a second. Actually, I'll pull it up now. S&P 500. I'm just going to start with this. 2. So yeah, the S&P 500, look, if we look at its max here, this is some summary from something, right? We're at all-time highs for the S&P. And that's right, these are the biggest 500 companies in the world by market cap, public companies. And so we're trying to see sectors that are just getting overlooked because everyone's hyped up in AI or I don't know this. Let's see, biggest companies by market cap. I did this a little bit in the last video, in the last stream, but this is all tech, right? That's oil. Tech. This is hardware. I mean, Tesla and TSMC are both more hardware. And then Berkshire Hathaway is like a holding company. So, we don't have what to me is sort of missing from this sort of top things is is more like infrastructure type companies. So maybe mining and stuff like that. That's what's coming to mind right now. Because everything here, right? ExxonMobil, there we go. That's something that's more like a natural resources type company. But everything else here is sort of it's just it creates finished products. And so to me, that's sort of, right, we're sort of being oh, we trust these companies. We trust them to build the things that we need. And that's just a different type of investing, right? So like if we look at like, let's look at just layers, right? For just like how value kind of gets created. There's like nature, and on nature there's like resources, and on resources there's companies that process the resources. After that, there's companies that take processed resources and build them into products, and then products get built. So an example of this would be like, just for right here, let's say like it gets built into a product. So let's say this get built into like a bolt or a tire or a beam. And then companies that take processed resources and build them into products. And then we'll say products go into other products. And this is like a Tesla or a computer. Let's see, companies that products into other products. Right, so that's like, when we look at it that way, this is like 1, 2, 3, 4, 5. This is like 5 layers down, right? And so like when these companies to me, where are they? When these companies to me are priced incredibly high, it means that we're putting a lot of investment and value and trust into these like already established kind of things. And you could say, oh, we always do that. But these are what am I trying to express here? These are very different from like a ExxonMobil, which is like, it doesn't, like when you look at, we'll look at ExxonMobil really quick. It says it's in oil, gas. It says it's in energy. Like, I kind of wonder, maybe we'll look at its, let's see if we can do ExxonMobil 10K. Oh, where's the SEC? Let's do this. ExxonMobil Corp. Cool. And we will look at the 10K. Right? It's been a while since I've done this. So like, we're really just looking at the first thing here. I don't know if I have the right thing. That's the 8K. I want the 10K, right? Close the 8K. Okay. This is failing me. It's failing me. The point is you could say ExxonMobil is like a, what percentage of ExxonMobil is invested in gas and oil? You could say like, okay, so it's 70% of the total revenue for oil and stuff like this. What's the other 30%, right? It's basically, it's an energy company if I'm thinking about it really simply. While the company is committed in lower emission alternatives, this represents only 15%. So 15% of its capital expenditures is lower emission stuff. But we keep driving cars and motorcycles and everything that creates gas. We have factories. All this stuff creates gas or requires gasoline. It doesn't require it, but that's how we're using it, right? So ExxonMobil is not like all these companies that I've been talking about really in the same way, right? You could say like, oh, oil and gas is a finished product. It's 70% of its revenue. I see it a little differently. I guess you could say this is sort of splitting hairs of a sort here. Maybe I'm not describing it well, but I see this company as it's different in that it's like really they deliver energy, and they're gonna be delivering energy in like maybe the way they know how, but they're just gonna whatever we want in terms of energy, they're gonna try and deliver. So like it's at 70% in oil and gas, 15% in like renewables. I don't know what the other 15% in. Maybe that wasn't. Maybe I read it wrong. Maybe that's in gas, and the other one's just in oil. The point is like this is delivering more of a raw material to us. Right? Like gas is something that goes into a car. It creates energy so that people can use NVIDIA chips and Microsoft and Apple and Alphabet and all these other things. So this to me is a lower level, right? This is more like a bolt tire beam, right? So if I'm going to categorize them into companies, let's see. Tesla. All right, I'm just cleaning this up a little bit here. Tesla, maybe I'll do Dell, Google, all those companies that we said. Facebook, maybe. NVIDIA. Right? This company is more like Exxon. Let's say Exxon is more like a layer 4 company. So it takes processed resources and builds them into process products. It's also, right? It's also kind of a layer 2 and 3 company. So we could put that there too, right? It's sort of it's vertically integrated. As far as I know, I'm not a master of ExxonMobil. I'm just sort of talking about a way to look at things here. I don't know what AbbVie is. We're gonna pull that open because pharmaceuticals. Yeah, okay, pharmaceuticals. Okay, so that's sort of how I'm looking at things here. And then because of that, it's like, okay, everything's at all-time highs, and these finished products companies are sort of at all-time highs. It's like such a joke. These valuations are just so like, I don't know. It's weird to see. So let's look at the Fed. What's going on with the Fed? This is sort of guides United States financial stuff. And I don't know, maybe just Fed rates. I'm kind of like, Fed funds target range. I'm kind of refreshing myself on all these different rates because like this is stuff I learned, but I just don't really, rates are different for different things. So let's look at Fed funds. Let me remember what this is. This is I think it's the rate that banks lend to other banks on. What is the Fed funds rate? Just sort of refreshing. Interest rate in which depository institutions such as banks lend their excess reserves balance to other institutions. Okay. On uncollateralized basis. So that's a like, I don't even want to talk about that. Really, I don't want to get into this. It drives me nuts. But okay, so this is a target federal funds rate. I don't know why it's called target. Maybe we may have to dig into that too. But interest rates sort of went up here. This is 2023, it looks like, through 2024, sort of later 2024, and now they've gone down a little bit. So this is one rate. There's a bunch, they set multiple rates if I remember correctly. But this is sort of like one that sets the tone for a lot of other things. I'm trying to remember what the best one is. Maybe it is just the Fed funds rate. It just kind of bothers me because I don't know. I'm not remembering how to analyze that at this current moment. All right, let's look at inflation. Inflation, 2.7%. Percent change from a year earlier. Yeah, okay, 2.7%. So in my memory, right, the goal for inflation is usually to have it between 2 and 3%. That's sort of like modern 2% rate of 2% over the longer measure. Yeah. That's sort of like the standard economic theory, whatever, what have you. Um, the sort of joke is in more like, I guess, fiscally conservative circles or something of this nature is like, this is 2 points. Like, this number is super crazy wrong. Like, it's usually much higher for like things we care about, like food and stuff. So let's just look at that. What is the inflation rate on food? And then we'll see here, where's land, right? So this is like housing. Land is sort of the base layer for housing. And so, yeah, so farmland in the United States has shown a lonward upward trend, an increase of 7.04% from 2022. So like 7.04%, you could say, oh, it's not a very long period. It's been 8% since 2000, right? Farmland has risen at, what's that, 5% plus more than inflation. That's a lot. Like, that's actually a really big amount over time. And so, like, be like, oh, farm, right? Like, maybe I'm choosing a weird thing. I just wrote land prices over time. Farmland's what popped up. But, like, that matters, right? It's like when people say, oh, inflation is only 2%, but, like, the land's 5%, and then maybe, like, foods, whatever. Like, that's not real inflation. Right? So inflation to me looks like still just not super accurate. Unemployment. Let's look at unemployment. Wow. On all these numbers, like, to me, aren't perfect. They're just something to sort of look at to get a base of, like, yeah, so 4.2%. We're apparently at low unemployment. That kind of tracks to me. I think there are, like, a lot of, I don't look at it. People, there's this number's like, has all sorts of weird rules about it, but I sort of look at it as like, if you want a job, can you get a job? If you're just like an average person, if you want a job, can you get a job? Maybe it's a not a great job. Maybe you're underemployed, like McDonald's or something, and you have a college degree or whatever. But that's like, you know, you have you can you can work and receive money and I don't know, to me, like, the ability to improve your situation and whatever in that regard is a huge indicator of the economic health of a place. Gross domestic product, GDP, this is how much the country produces. So this is how quickly the country's growing. And so this is just funny. This 2020 data is just so funny to me. Yeah, I mean, minus 28%. Think about that. So let's just think about, I'm going to go back and we're going to do COVID really quick. Let's just talk about what this graph means, how I'm understanding it. Let's talk about COVID. Or maybe I shouldn't talk about this on YouTube. I don't know. Like, I'm just talking about money here. I'm just talking about what I think this graph means. I could easily be wrong. And so, yeah, I don't understand YouTube's policies, so if this is a problem, hopefully, you know, maybe yeah, I don't know. Hopefully it's not a problem. So COVID, minus 28%. So let's say this is 1 quarter. Let's just do it simple. Minus 28%. So let's say we had a value of 1. And then we have 1 times 0.28, right? And so then we'll have, so this is the new economy. We'll do this minus this, right? So after COVID, let's say the gross domestic product is down to, we're at 0.72 of where we were. So that's huge. Oh, but then it goes up 34.9. Okay. So we'll do this times 1.349. And we have 97, right? So it bounces back, but it bounces back. It's still 3% lower. 3% is huge in a way, right? 3% is like, I'm not going to go into finance and like compounding and stuff right now. But just like in terms of understanding where we are, losing 3% in that time period is like, to me, is really big. So that's that's I think that's sort of important to sort of, it's hard to like, history books, it makes it hard to contextualize like how something shifts somewhere, but that's significant. All right, so now that we have a sort of an idea of interest rates and we have these big companies, let's look around at stuff. So I really just want to look at land right now. I'm not going to lie. I'm going to enter Texas. Texas is interesting. Actually, I'm going to enter Nevada. Nevada's interesting to me. There's certain places that have incredibly cheap land, and I think watching how much the price of like dirt cheap land changes is like, I say dirt cheap, that's kind of a funny thing. I think this is, let's just say the max is $10,000. Watching how much the price of this land changes is significant because it's 2025, right? Like anyone could, well, maybe not anyone, but it's like if you set things up right, you could live on this potentially, right? If you can get enough water and food and stuff like that. So the buy-in to just like own a part of the world, and like, it's a different thing to own land than to be a renter or houseless or whatever. So like, what's the buy-in? There's 452 listings. Let's see if it's even lower. Yeah, so this isn't actually $225. This is like, cash price, owner financing. Right, so it's owner financing. This is actually $15,000. Yeah. Okay, so that's that. So it's hard to tell like what's actually, maybe there's a better site that can just only list cash prices or something like that. But here. This is less money. But it's also recreational. We don't want to look at recreational because that's just undeveloped. Okay. Farms and ranches, home site. See more. Commercial. How many properties are there? Wow. There's so many. I just want to get all these. Except we don't want anything that a person could not like legally live on. So that's what we're looking at here. Let's see. I hate all these numbers because they're wrong. Is this a real number? Is that a real number? Let's see. Okay. Sort of like mountainous or hilly type thing. And what's the deal? Bunkerville, Nevada. It's 1.77 acres for 3,500. All right, so that's like, that's a thing. 5,000 for 0.19 acres. It's so funny, like, view all two pictures. Like nothing's developed here. Oh wait, no, that's a house. These are houses. Okay, so this is all right, right? But okay, so $5,000 for basically a little housing site in like a potential future suburb or whatever. So yeah, okay, so this is good. This is helpful. This is helpful. It costs $5,000 to have like that little housing site or a space for a bigger housing site, and like I don't know if anyone lives there. Okay, to me that's like if you want to buy land the traditional way, that's the thing. All right, so now I'm going to talk about the Wall Street Journal. I know this is kind of all over the place. This is just like I had to move forward on this somehow because I think the S and I think things are overpriced, and when things are overpriced, there's things that are underpriced, and when you can't see them, it's very odd for me to not be able to see them. Usually, it's very obvious, but I'm not. I think it's easier to see from cities. So Berkshire Hathaway is near $10 bill for Occidental Petrochemical Group. I'm gonna look at this. I want to know what Occidental Petroleum is. I have a feeling this is California's. Okay, great. OXY, this is a public company. That's fine. Where's Yahoo Finance? So the reason that I look at that other land thing, right, is like most stocks people can get exposure to, but if you want exposure to land, like in a traditional way, one has to actually like owner finance or something. You have to like spend that money to get land. So like the buy-in, in my experiences, tends to be higher, whereas like you could buy an S&P tracker. So like something that tracks the S&P 500 that basically does the same thing. So Oxy, let's look at this petroleum company. What is this petroleum company profile? Yahoo Finance, in my experience, is the best for just quick stuff. So it's oil and gas in the United States internationally, chemical and midstream and marketing. The oil and gas here. I want to know where it's like based. Holders. All right. I want to understand where this company. What's this company's story? Okay, it's headquartered in Houston. And it has 12,000 employees, if I'm rounding up. All right, Houston. So for those of you who don't know, Houston's on the Gulf of Mexico. So to me, this is like founded in Los Angeles. I thought it was founded in Los Angeles. What's the story? Where controversies? Yeah, all right. I just wanted to know like what its vibe is, I guess. Okay, so yeah, so it mostly operates in West Texas. Interesting. Yeah, so a lot of oil operations in West Texas, which is right, like the Houston's more East Texas, if I remember right. It's like, and Texas is huge. Texas is like the size of a country. I guess depends on your size of countries. Where's Yahoo Finance? Sorry, I'm just like trying to. I got too much stuff open here. We'll close that. I'm going nuts. All right, we'll close the land stuff too. I think we're done with that part of this. I totally forgot what I was. Did I forget what I was doing? We're just going to look at the story of this company's monies. Okay, it went way down in 2020 when everything, or a lot of things, were just like tanking. And now it's kind of where it was in 2006. Is that? Okay. So the story here, to me, right, this story is that Warren Buffett thinks oil infrastructure in the United States is underpriced, or maybe just that specific company is underpriced. So he's trying to buy it. So that's the story for that. That to me is interesting. I think so. Like as an investment, so I mean, we started off talking about ExxonMobil. As an investment, which is the biggest one in the world apparently by market cap, it's the biggest sort of energy company, right? Unless you consider Tesla an energy company, or Saudi Aramco. I forgot about that. My bad. Yeah, I don't think any of these else are like energy companies. So, yeah, I mean, like energy is the thing the Western world uses every day. And a lot of the world uses every day, and we're always trying to do it in more efficient ways if we know what's good for our wallets. And so it is kind of a fallback investment in a way, I think. Or not a fallback, but it's just like if you're buying the things that are necessary. All right, there's a lot of politics in here, so we are going to get out of this.
For too long, we've promoted too many uniform leaders for the wrong reasons.
And we're going to go to business.
Based on their race.
US.
Based on gender quotas.
Go to economy.
Based on
most of this. We're going to tech and markets and finance and real estate. There's a lot of stuff, right? We're going to go to health because we're probably not going to look at health, but in the interest of like opening our minds and looking at something new kind of every day, we'll look at that. Up here is it looks like these are different indices. And that's that. Okay, cool. We're going to close this. And we're just going to go through things. What's going on in the world? We're not going to talk about that. These things affect things. I just don't want to talk about them on YouTube. It just doesn't seem appropriate for this, what we're doing here. But these things affect things. So, like, know that, wars have serious effects on markets. And I do not know enough to really comment on them. And this stuff to me is like, I might dig into, but because I don't know it, I don't know. So usually I go to world and there's like more. This to me is a lot of politics. So I don't know what's going on with the Wall Street Journal, but this is not what world used to look like to me. I'm just gonna see if there's anything here, and then we're gonna get out of that because that does not seem helpful. All right, cool. Business can be interesting. It's sort of just business is interesting because you're kind of looking at the strategic plays that a lot of these companies are making. They're positioning themselves for the future, and so that can be interesting. The Berkshire thing is people follow Warren Buffett because for a variety of, if you haven't read about Warren Buffett, it's worth a read. Big oil is getting leaner and leaner. Exxon is the largest oil company to announce job cuts as the industry continues to adapt to lower prices. I would imagine part of this story is there's also great technological gains. Like there's usually technological gains going, right? There's a lot of automation here. And so like in general, it would probably just mean fewer people are needed to create the same result or better results. Okay. Yeah, retail, I just don't, for like clothes and stuff like that, it's not really what we're going to be talking about here. It's not what I understand very well or know much about. I think in a broad sense, it can be interesting, but we're not going to talk about that today because I don't feel like it mostly. Lithium startup Electroflow Technologies raises $10 million. The company made an electrochemical cell that can pull battery-grade lithium directly from brine in a single step. That sounds interesting. What is that? What does it mean to extract lithium from brine? If you're new to finance, this is kind of right? You learn a little about a lot depending on how you do it. Some people just dig into specific things and sectors, but okay. Okay, so I guess there's a lot of lithium in water or something. I don't know. This might be a big deal if it makes lithium processes more whatever, easier, more cheaper. So that might be right, but that might drop the price of lithium. I don't know. I'm not gonna think about it right now because I don't care. We're just getting an overview, right? Spotify founder Daniel Ek leaving CEO job. Okay, this is just absorbing broad information. U.S. government is expected to get multi-billion-dollar fee in TikTok deal. I will read about this. Take control of U.S. TikTok operations. I don't understand this. I don't want to read about that deal. Actually, if it's not straightforward like that. Wow. Blackstone names new CEO of real estate fund after. Interesting. Man. I'm just, yeah. We're not going to talk about that here, but that's. I don't know. All right, retail earnings. Earnings is interesting. Cracker Barrel. I don't care. We don't care. All right, Nvidia predicts cooler growth. We'll look at earnings. Business is not my favorite thing. We might be going too slow over this. Yeah. I'm looking at this fry thing. Food is interesting. I kind of get the feeling people are trying to eat healthier. I could be wrong. That might be anecdotal, but that's a big difference. People not eating healthier versus like people trying, like they're trying to eat healthier. They might not be eating healthier, but I don't know. Who knows? Maybe French fries are healthy. Maybe there's part of them that are healthy. Okay. All right. The TikTok thing, we're gonna get out of that. What else? US. Go to US again. Oof, I don't know if any of this is. Okay. Punishing droughts put fresh pressure on meat and dairy production. We can look at that. So I'm guessing this has to do with the feed. The meat and dairy feed. Droughts have hit countries around the world, swing meat and dairy farmers rely on water to hydrate their animals. Okay. Grow crops and feed them. The report. Water risk. Okay, to me this is opportunity, right? This is farmers having problems. So this to me indicates like investing in farms that are better placed. Investing in farms that are not as exposed to I don't know, drought or what have you, things like that. Yeah, this stuff is really interesting. It's also really hard to get a handle on, in my experience. So, demand for freshwater is set to exceed supply by 40% by 2030. So water is a big deal. All right, water. We just type in water there because that's something to look into more. That's been on my list. I've forgot about it. We like that. Okay, so it took us a while. We found something. We found a seed. Outer Banks. Yeah. I mean, I don't know. If you're it's like living on the beach is an interesting choice. Or, if you feel it's not a choice, then I don't know. But we got feet. I wouldn't be near the beach. Feeling especially hot and sticky this summer. Now there's a metric for that. Okay, that's clickbait. We don't click on clickbait. Home energy tax are expiring soon. this is kind of interesting. I don't really want to get into it very much, but this will affect markets in an interesting way, and I kind of want to. So like, home energy tax cuts. I'm just writing that, or home energy tax cut expiring. Sorry. I just want to touch on that because I think that's an interesting thing to pay attention to. I don't, just for what it puts out in the market in terms of like, it affects markets. It's very weird, and I don't know if it's going to go anywhere in our lifetime. This type of energy tax cuts and stuff like that. So things that aren't going to go anywhere in like our lifetime, I think like that stuff to me is worth paying attention to, because if you're looking at investing on like a long-term basis. Let's see. What is BOE? BOE deputy governor? We're going to read this. Economy is a good, right? This is one I'm more, I used to like world, but like the world news, but this is, all right, what's this? UK's annual rate of inflation is on track to fall. Okay, this is some English business that I don't think we care about, frankly. Yeah, I don't really understand Chicago's economy. Like, it's based on agriculture in the Midwest, I guess. I don't know. You know, they trade commodities there still, right? So I'm not going to touch on that, but I wouldn't, you know, I don't. It's not something that's interesting to me. Maybe it is interesting if you understand the nuances of agriculture and like Chicago and the industrialization of it, but that's not my lane. U.S. labor turnover was steady. The rate of layoffs in the economy was mostly steady. Hiring was largely steady as well, with the rate of new job offers holding at 3.2%. So that's just labor turnover. Okay, steady. This is all past stuff. So like knowing the future is kind of what we're trying to get at here. But you can't know the future, but like, you know, it kind of gives us a basis to go off of. Eurozone. I also just like I don't want to touch Europe really. I do want to read about U.S. home prices a little bit. We'll see if that's. Let's dig into this a little bit. U.S. home prices over time. Can we just get a simple graph of this? Because this is something I hear about and I haven't had a chance to. Median sales prices of houses sold in the United States. Excellent. Fred. That sounds like something. Yeah, I forgot. Federal Reserve Bank of St. Louis. Okay, whatever. Yeah, okay, cool. So this is by year. It looks like 2022 was a peak. And 2025, 410. So how much lower is that than the peak? How much lower are we? If we do 442 over 410, we'll just keep it that simple. Home price peak, 422. Right, sorry, is that right? 442, excuse me. 442. And now what are we at? 410. I know there's some other numbers after that, but they will not make that big of a difference. And so we're just going to do 1 divided by the other. 410 over 442. All right, 92%. So they've dropped like 7.3%. Is that right? Where's the little percentage thing? Sorry, I'm not. There we go. 92.76%. So they've dropped 8-ish percent. No, 7.3%. Drop of. We'll just do this. 100. 1 minus that. Nope, that's not what we want to do. Equals 1 minus. So 7.24%. That's not insignificant. So I personally don't find this market interesting. I think this market is interesting. It is interesting. It's generally not a market I dig into. It's something that the nuances of, or there's just all sorts of weird stuff involved with it that I like simple stuff. So like to me, the land data, price of, what's the word I'm looking for? Price of undeveloped land over time. This is more interesting to me because land is more like, you know, land doesn't change based on bedrooms and bathrooms and I don't know, like it's just more, it's more simple to me. Prices per acre by state. I kind of want to click on that. Yeah, we are going to click on this. It doesn't say over time. I don't like this. Never mind. We're not going to do this right now. And so this is what there's no good data on this. And things that there's no good data on usually means there's money to be made. Yeah. I want, let's see if there is price of undeveloped land in the United States over time. You can search graph. The Department of Agriculture has stuff, and so like, this is, what's this, 2022? Yeah, we're back to this sort of stuff. I don't know how much I want to do this, but right, if agriculture is all we have, the price, that's only to 2022. Yeah, darn, we're not going to be able to look at that. All right, whatever. But on to technology. Video game generator app to rival TikTok and YouTube. Okay, we don't care about this. We don't care about the AI stuff. To me, it's like, it's too hard to analyze things during their first hype cycle or big thing. And so like, I can't distinguish between the signal and the noise. I don't expect that I'll ever be looking at that. Maybe a little bit I'll touch on it and stuff, but I generally stay away from that. I think that stuff's very difficult to value. Why EA is ready to quit Wall Street's game. What? Oh, this might be interesting. A company going private. I want to know about that. Why is EA going private? Things leaving public markets is usually interesting. It usually speaks to some cultural thing, in my experience, so short-sighted decisions. Yeah, they want to make long-term things. That's usually like a reason that's cited. You just continue to have to answer to people. So like, right, like if you're a new thing and you start doing really well, they go public, they make a bunch of money, and then they're like, then they have to keep answering to the public, and then they're like, I don't want to answer to the public. I want to like build the stuff that I want to build. That's kind of right. That's kind of that story there to me. We're not going to touch on it too much. I think esports and video games is kind of interesting, but I also stay away from it to some degree because I don't understand it. It's not really a market that I'm interested in. YouTube to pay $24 million to settle lawsuit brought by Trump. Don't care about that. Debt is fueling the next wave of the AI boom. This is a great thing to, right? So if there's some bubbles in the AI world, which, I mean, yeah, I don't know. If everything you see is AI, like, comparisons.com didn't make much sense. 3 years in, growing levels of debt are making them ring a little truer. All right. But who's got the debt? Who's holding the bag on these AI companies? Here's who's holding the bag on these AI companies. I don't know for sure, but what happens when there's not as much demand for AI? What happens if there's right, like let's say AI is the next internet. What is the 2000 or 2001? When did everything crash for that? I think it's 2000, 2001, something like that. What are the companies that'll probably crash, right? There'll be a bunch of NVIDIA chips all over the market, right? Microsoft, I think, is tied into the AI stuff. Apple, I'm not actually sure how much is tied in the AI stuff. Apple might be more durable during that. Apple is something I understand less and less personally. So I don't know if that, but yeah, I don't know. Apple might be more durable, right? Like I don't see them. They were. Someone said they were caught off guard by the AI thing, and which means they're not exposed to it. Google, I also don't know. I'm like, Google's kind of plugged into a lot of stuff. I'm not sure. Amazon, not sure. Tesla, I don't know how exposed Tesla is to AI. I don't know how much I want. I think AI is the story here. Okay, so let's talk about this. AI is the story in terms of why is the market priced so high right now? Okay, yeah. I mean, that is the story. I guess that's kind of obvious. I kind of knew that, but like to me that's like what is this price? There's way too much stuff here. What? All right, we're going to close this stuff. We're going to close the US. Where are we? We're going to close that cuz we're just in a closing thing type of thing. This is all stuff that I wanted to go over, but Bureau of Economic Analysis. Close Google Trends. We'll close the Dow Jones. The S&P, here we are. Great. This is an all-time high, right? Like we are just, the market's so priced. And what is the story for that? The story for that is cash. It's this sort of cash is trash type thing, right? But whenever everyone thinks cash is trash and they invest in AI, maybe cash isn't so trash. Who knows? I don't know. So where were we? We don't care about Occidental Petroleum anymore. That's that still. This is another S&P thing. We can close that. So yeah, I mean, the debt fueling the AI thing, like, you know, maybe cash is the best thing to hold right now. I don't know. I'm like, you know, it's like, this is all about like, right? Like if you have a portfolio, what's your portfolio? What is one's portfolio invested in? Let's say emergency stuff. I don't know. What's this? Gold, silver, oil maybe? I don't know. And then we'll say bonds. And then we'll say S&P 500. Let's say it's that simple. S&P 500, right? And then we'll say cash. What percentage of your portfolio is cash? Right? So cash, I'm going to make these the color green. Sure. I don't like that. I'll make that background color that. Make the background color some darker. Gray. Too dark. Why is that not gray? I think it's because it's highlighted. Okay, great. This isn't the best. I know this isn't the best. We'll make it bold. Maybe I should have left it. So this is the decision, right? The decision is like, let's say that we're like, how do we start this? 80% the S&P, 10% emergency stuff, 5% bonds. Let's say you're a young person. I don't know. I don't even want to talk about bonds. It's like it's a whole thing. It's a whole deal. We're going to do percentages here. Whoops. Okay, nope. We're going to do emergency stuff. 10, 5, and 80. Not 90, 80. And so this leaves cash. 1 minus these. Is that going to work? Nope. This isn't Excel. 1 minus equals that. This isn't Excel and I'm like tripping right now for why. But this is 85%, 95%. This leaves cash at 5%. Right, that's like this is not Excel. like so out of touch with this right now. That leaves cash at 5%. And so like if this is someone's portfolio, right, and like all this stuff drops because like an AI thing, the AI bubble, if there's an AI bubble and it drops, then all of a sudden you lose a bunch of money. If the market continues to go up, you don't lose money or whatever, you gain money because you're not as exposed, right? Cash, the market goes up, you lose money to inflation. So, artificial intelligence. This is the artificial intelligence section. New front opens between Zuckerberg and Musk. Robots. Okay, so robots. Let's talk about robots. We talk about robots on this channel. Clearly, I'm bullish on robots. I've been bullish on robots for a while. Just automation and that type of automation in general. I think there's a lot to be gained. I think there's robotics. Robotics. There's low talent, right? There's a talent shortage. There's a talent shortage. And I guess if you're watching this later and we're talking about robots, it's not on this channel. It's on the channel this was streamed on. This is not, this channel is about business this will be posted on. So there's a talent shortage, I think, in robotics, right? Because in order to have a talent, robotics consists of electrical, mechanical, and software. At least these three things. And so like these are not easy things to understand, right? Like these all take a great deal of learning. And so to have someone who's skilled when understands robotics and understands these three things, like you have to understand these things. And then when you add robotics, all right, let's say robotics industry, when you add business, right? If you're an industrialist, if you're an investor, if you're a person trying to conduct business and you don't understand this stuff, what are you basing do you just talk to technologists and you go, oh, I think this person's right? Like, so, okay, not to throw shade or whatever, but this to me is like, when you look at like, what's that podcast? The All In podcast. All In podcast. When you look at the All In podcast, like those to me are people that like, I don't think they understand that sort of engineering side very, very well. And so they're trying and make decisions in a robotics industry when you don't really understand these other components, to me is like, you're either in some niche or something, but like, anyway, so yeah, so robotics industry, this is why it's interesting. It's interesting because it's hard and it's important. It's important because it can change our lives in a really positive way. Right? Like in terms of looking at the future, and it's difficult. So that's what makes it interesting to me. It's sort of like, what am I going to say? High learning curve. Right? To build a robotics company, one has to understand 4 different key things. If you're going to build like an oil and gas company, maybe you just need to understand business. Like, I don't know, like how complicated is that really? Maybe it's super complicated, but like you'd say anything is. But like in terms of having good products, all the stuff I just said, understanding engineering and just to understand engineering, each one of those, you understand physics or you understand, like, there's just a lot to know. So, so the new front opens between Zuckerberg and Musk over robots. We'll do a quick thing of this. I don't know. Okay, nope. It's like, don't want a human interest story right now, really. Venture firm Touring Capital decided to use AI to scout deals. This is just, when it's just word salad like this, let's look at this. What does this mean? Yeah, okay, so they're using AI to invest, which, like, okay, there's not really a play there. Like, it's like, it might be interesting for, like, okay, sure, like, of course that's a thing, but it's not, like, that's not an investment. I mean, I don't know, whatever. I'm not mad that I opened it. I'm kind of glad I opened it, actually. AI is going to change literally every job. Walmart CEO. That's significant. you know, like I do think the AI thing, you can't see the signal from the noise, but there is signal. What are world models? The key to the next big AI leap. Oh, that sounds interesting. This is like modeling an entire world in simulation. That's what that made me think of. Wow. Okay, we're not going to dig into that. Man, we are going a long time today. Well, I guess this is kind of my area of expertise, so I guess I have a lot of stuff to say. Personal technology, the boys are not all right. Yeah, I mean, if you don't know that by now, like, I don't play video games for a reason. Maybe I'll play a little soon for funsies, but like, there's a wide world out there, man. The new Apple Watch has longer battery life and other perks. Should you upgrade? Well, I don't know. Who cares? What? This to me is an advertisement. That to me is an advertisement. ChatGPT's parental controls. Oh, good luck with that, man. iPhone Air versus. This is not a good side. That to me is not a good side for that market. I don't know. It's just like. The parents. iPhone Air versus iPhone 17. None of this matters. Personal technologies, though, like liquid glass is here and your iPhone will never be the same. Okay, so maybe this matters in I just think this stuff is over focused on this. If you're a techie and you're like, oh, super, like, what's the future, whatever, this stuff's interesting. Maybe. Whoops, I did not mean to click on that. Yeah, biotech, we're not going to touch biotech. That's all I'm going to say about that. Yeah, I don't know. To me, Apple isn't that interesting of a technology company anymore. Sometimes they do things that I think I'm like, ooh, I pay attention a little bit, but yeah, that's how I feel. Markets and finance. What is Trump strikes deal with Pfizer? Trump strikes deal with Pfizer. What is this? Okay, this is weird. I don't want to read about it. It seems significant to me culturally. Maybe it's not, but this is not capitalism to me. And when we start talking about not capitalism, to me, eventually there will be a correction. Yeah, man. So I guess that sort of illuminates to me a bigger thing that's going on, which is like isolationism. Isolationist policy. Read about Japan and Japan's isolation period. That's all I can really say about that. I don't know a ton about it, but in general, trade is helpful and trade is good. And I think a lot of my problems with, it's complicated. It's difficult to talk about because there's no easy answers, I guess. But the easy answer for me is like live more efficiently. And so like in that live more efficiently, these are kind of jumps here, so if you want to know more you have to ask in the comments or whatever. Easiest answer, live more efficiently, get to know different places and peoples and ecosystems. We'll go full hippie here. Ecosystems. So this speaks to like what investing I find interesting. So living more efficiently, right? So like, let's go back to Tesla whoops, darn it. Biggest 500 companies by market cap. we're gonna go back to Tesla real quick, and we'll just talk about this. Tesla's interesting to me, right? Because it lives on the edge of two things right now. Right, this whole AI thing, it's kind of, I don't know, and it's like, is it gonna lose a bunch of money there? And then, and does that even matter, really? And then the other thing is, like, in terms of living more efficiently, right? Like this, if we look at all the externalities and whatnot, I don't know, but to me, I get the vibe that like exploding hydrocarbons and is not the most efficient way to do energy. So right? So if the battery thing is more efficient, like that's huge. That's a company that'd be interesting to me, or like things that are like this, things that are like Tesla in terms of like creating better energy infrastructure, excuse me. But it's mixed with the AI thing, right? So what I would try and do if I was bullish on the energy thing is I'd try and find a smaller Tesla. I'd try to find a smaller energy company that's doing something and applying that is a public company that I can apply to, right? So that's not going to be found in these biggest 500 companies necessarily, maybe, right? So like literally though, a way to search for stuff I've found, and I don't really hear anyone talking about this, right, is to literally just learn what every one of these companies does. Just go down the list, right? If this is if the biggest company, let's assume the biggest company is is the safest company. There's all sorts of problems with that assumption. But let's assume you're like, if you can only buy one company, you're going to buy NVIDIA, or you're going to buy the S&P, or buy the top 30 or whatever. Learning about all these other companies is, I think, really helpful. Any of these companies that you don't understand, you can just read about. So we might be doing that on this channel. I'm not sure. But anyway, that's the thing about the whole like living more efficiently and stuff like that, right? This is all about all these companies deliver products more efficiently than other companies. And that is why they are up there, or part of the reason anyway. Okay, where are we? We're almost done with this, I think. What time we got? Wow. Okay. Ambassador warns that China is using U.S. farmers for trade leverage. That's kind of interesting. I want to know the mechanics of that. U.S. ambassador to China told Reporter Tuesday that China is using its purchasing power and agricultural projects as leverage over the U.S. in trade talks, but he hopes for a resolution soon. This kind of seems silly to me, but I don't know. I mean, I could be wrong. U.S. agricultural exports to China have plummeted this year, affecting products with soybeans and beef and more. In their place, China has ramped up imports of farm goods from nations like Australia, Brazil, and Argentina, sparking consternation from American farmers and Republican lawmakers. That actually is very interesting. That goes back to my investing in like better positioned farms, like farms that grow good food, not farms that, no disrespect, but like not farms that just grow a bunch of something not very good with a bunch of chemicals, right? So maybe that's a short play. I don't really like to short, but let's look at, Roundup. Who owns Roundup? We're making friends today. Roundup, Monsanto. Okay. We'll search for Monsanto. Now, before even looking at Monsanto, I'm going to say Monsanto, and I could be wrong here, right? But I'm going to say Monsanto is not growing that quick right now. So, Monsanto ticker. Monsanto, if you don't know the agriculture industry, these are heavy hitters here, apparently. I don't know very well. So, okay, wow, Monsanto in 2007 was huge. They used to be. This has been a company that was in the news a lot. Okay, yeah, so not growing super quickly. So, I just don't think people want food that's grown really poorly. And I think when you have to grow food really poorly, right, it's like, if you can just buy food from one country or whatever, I don't know what the deal is. The food markets are interesting. Then maybe you buy bad food, but yeah, whatever. I don't care. Maybe I could easily be wrong on all that stuff. Take what I say with a grain of salt. But yeah, investing in sort of that bread and butter simple farm. Our farmers, in my experience, they're never complaining because they're too rich, and there's lots of reasons for that. Investors are fretting that the stock market rally is on borrowed time. Yeah, startup founder Charlie Yavis. Is that how you pronounce that? Javis? I don't know. He's hot stocks keep rising. The credit market is humming. That has Wall Street on edge. Yeah, we want to know about the credit market. Frothy market is concealing signs of excess. Sudden bankruptcies rattle investors. Investors are globbing up corporate debt like it's going out of style. Yeah, man. I don't like, okay. Moral of this story to me is like, it's kind of the same as what we started with and why we're doing this, which is like the S&P is not like, it's not like, I don't know. Tough place to invest in a hot market. Banking, we're gonna ignore banking. To me, banking is it's just not interesting anymore. Investing. Yeah, I don't care. Commodities and futures. Gold hasn't rallied this much since 1979. What happened in there was this recession. Okay, so I think there was a recession in the early 80s, if I remember right. Early 80s recession. People buy gold when in 1982 contributed to the Latin American debt crisis. This is Wikipedia. Impact by country. Let's go to United States. You know what? Let's just do good things to invest in during a recession. I just clicked on the first thing. I just don't, because this is stuff I forgot, right? So gold. So this is why gold, U.S. Treasury bonds. The idea is that they're safe. Dividend paying stocks. Yeah. Okay. So like not growth, buy stuff that. Hence Warren Buffett's like play on oil. I don't know if that. Oil stocks often pay dividends or big ones or something. So I don't know. That's just maybe that's a jump for me. I could be wrong on that. Defensive sector ETFs. Yeah. So consumer staples, gas, electric, stuff like that. Stuff that people are going to use either way. People aren't going to stop eating food. High quality corporate bonds, hence the story that we just read maybe. Real estate investment trusts, REITs, right? Real estate, everyone needs a place to live. That's the story there. Cash or cash equivalents. All right, so this is a lot of, the only thing that I'm sort of, the thing that I took away from that I haven't thought about, recessions don't always result in market downturns. Yeah, we don't care about whatever. Sorry, we're just going to continue on here because, all right. Mining mega deal shows the world is crazy for copper. Why is the world? I would imagine this is for infrastructure. Artificial intelligence rising military spending are further buoyant in demand for. Okay. Copper price over time. This might be my longest stream ever. Maybe second longest so far. We'll look at this. Copper, super expensive right now. Yeah, okay. I don't know. I'm not gonna touch that much. Commodities are not something that. Commodities, I find they're. One must be an expert, maybe. Lumber prices are flashing a warning sign for the U.S. economy. I like this. Commodities and futures I like. This is a helpful, falling lumber prices, right? So this means people can't live in the places that are getting built. That's the story there without thinking about it. That's my guess for the story. Food prices hold broadly steady in August. Okay. I don't know what that means. I don't have the mental capacity to know what that means. The credit market is humming, and that has Wall Street on edge. I do want to know what. All right, consumer debt graph over time. Yeah, sure. How do you word that? Household debt and credit report, New York Fed. So This is the last 20 years. So debt went from 8 to, what's this, 18 or so? Non-housing debt is, okay, so more people are in debt to non-housing things. I'm not sure what to say about that. Besides, I would imagine spending on like luxury items is going to drop, which I think sort of plays to everything that the other channel, the channel that I streamed this on, is, you know, it's a lot of used tech and used stuff like that. It's like people just aren't going to buy the newest thing. That's how I could be easily wrong on that. I'm just like, yeah. I'm sort of shooting buckshot, for lack of a better way of saying. Like I'm saying sort of broad strokes here. I'm painting with broad strokes. Okay, that's done. Real estate, man, I'm really going slow. I'm going slow, but this is helpful for, I'll wake up and I'll know after I sleep, I'll know what to do next kind of thing. Jessica Capshaw. What is this? None of this is, what is this? This has nothing to do with real estate. What's happening? What? This is nothing. We're in the real estate section. What is this? This is an ad? That to me looks like an ad. Yeah, okay. Private clubs, sure. That makes sense. Is it real estate? I guess. Rise of accidental landlords is bad for investors who bet big on rentals. This is interesting. What's the story here? Big corporate landlords have unwelcome new competition. Regular homeowners who can't sell their properties are renting them out instead, and the growing number of accidental landlords is a headache for pros. Interesting. People can't sell their houses. Hey, I know how you can sell your house. Drop the price. Does that work? I don't know. Maybe. I would imagine it probably does. They just don't want to drop the price as much as they have to. Sells for nearly $67 million. One of the Hamptons' priciest deals of the year. I like looking at these. These are fun to look at. These, I don't know how helpful they are. It is interesting to look at this type of stuff. Yeah. Okay, so it went on the market for $79.5 million. All right, so Hampton's house sale. Initial asking was 79. Sold for 79.5, 66.75. 79.5. 66.75. Okay. How much less is this? I can't, like, this is like, all right, so it sold for almost 13% less. Wait, what did I just do? Sorry, that's wrong. I'm getting tired. We're past my prime here. Is that okay? Wow, no, okay. It sold for it sold for 16% less. Significant. So we talked about this earlier in this stream. Oof, man. All right. This is gonna be a weird. Sorry, I didn't expect to stream this long. So, it sold for 16% less. 16. What were we looking at with the sort of land prices? We looked at that sometime earlier in this stream. Housing over time. I thought it was something like 7% or 8%. Things were average sale prices of houses sold in the United States. Inflation rate for houses between, we can do this. This is fine. We said there was something off their peak. Is it up here? Did I write it down? Home price peak. Okay, 7%. So 7% of the peak, but for the Hamptons, the really expensive one, it dropped 16%. So that's 9% difference about. So that's right? So for the nicest goods, for the nicest things, maybe, or the most expensive in some sectors, right? There's a 9% discount right now. So this is interesting. I can't really. I'm not going to dig. Maybe I'll dig into that on the next stream. I just don't have the mental capacity right now. But that is noting differences like that are interesting. And I obviously extrapolated that one Hamptons house, this Hampton house here. I extrapolated that to the entire market, which is a flaw, right? But yeah, it's just notes to research further if I want to. And yeah. Yeah. Okay. Yeah. Miami this is one of the most sensitive real estate markets ever. So, I know of. I've heard, right? When you look at markets that crashed in 2009, I think it's like Miami, around Vegas. Biggest housing market hits in 2009. It was Miami, Vegas, and then where else? I'm trying to remember. Let's look at the AI answer. California, Michigan, Ohio, Florida. I don't understand Ohio. What is this? The industrial sector? I'm not understand. I don't understand. Ooh, Michigan, cars? Like what? I don't. Ohio and Michigan, farms? Like I don't. So, but California and Florida had the highest foreclosure rates in the nation. Okay, these are foreclosures though. I was talking about which housing markets dropped the most in price in 2009, in the 2008 financial crisis. Arizona, right? Okay. Arizona, California, Florida, and Nevada. I don't know if these would be the same, right? Nevada has there's like a Tesla factory there or something now. I don't know if these will be the same, but like, right? This is like Vegas, the beach. And California is just like, it's such a big state. I don't know how to touch that, but it's a big state. It seems financially kind of top heavy to me. And then Arizona is like a pretty empty state, is my understanding. I don't really understand that either. Maybe people have vacation houses there, but that to me is like, that's stuff to look at. Those are markets to look at. So I'm going to write that here. This is most significant price appreciation. In these areas, houses prices fell more than 50% from their peak. All right, so according to the LLM, housing prices fell the most during 2009 recession. Okay, so those are markets that are interesting. Those are markets that are interesting to watch. Potentially right now, if there is sort of like a housing bubble type thing. I think real estate's just always an important market to look at. Well, maybe not always, but depending, I think it speaks to things. It tells stories. Bears defensive tackle Grady lists Georgia home for $6.2 million. Yeah, so he's moving. Okay. All right, real estate. This is always, this is like new development, virtual listing. I don't know what these things are about. Okay, wow, that was a long time in real estate. How long have we looked at real estate? Health, our final thing. Yeah, back to this. This is all pharmaceuticals. That's what it seems like to me. I'm not really... Okay. Yeah. I don't know. Whatever. All right, we spent a ton of time today looking at the Wall Street Journal. I'm trying to think if there's anything else that we're going to go over. Bureau of Labor Statistics, Bureau of Economic Analysis. This is kind of new, like international transactions. We're not exporting as much. Is that what this is? International trade in goods and services going down. Tools. Country facts. World total values for U.S. trade and international investment data. Oh, it covers stuff with other countries. Huh. How about Mexico? All right, so we import more from Mexico than we export, according to this, right? If I'm reading this quickly, so if I'm wrong, correct me. But trade deficits. All right, we'll look at this before. Trade deficits over time. Okay. All right. So the trade deficit in 2022, it looks like peaked, and it came down some. But this is from 1970. So, right. So this is like imports versus exports and stuff like that. That's sort of the thing we were looking at. Maybe it's just that. Sorry, I'm really tired now. This is significant. This is a good thing to look at. I'm gonna write that as a note. Trade deficits. It kind of just speaks to our place in the world in terms of what we provide and what we consume. If you are in the United States, okay, it's like a 10K. U.S. Bureau of Labor Statistics. All right, we'll do a quick thing of this. Maybe we'll just look at monthly or by month. Oh, wow. Okay. By month. What? How do we look at this? Subjects. Consumer price index. That's inflation, right? Yeah, this is inflation. Oh, this is interesting. Okay, so food, 3.2%. Energy didn't go up. Major categories. What is major categories? All items less food and energy. All right, CPI, Bureau of Labor Statistics. All right. Let's see what else we import, export. I like this. I'm just writing notes for next time. Clearly, I spelled bureau correctly. National unemployment, state and local unemployment. What's interesting here? Pay and benefits. Earnings by industry. Sure, why not? Geographic information. Oh, I'm gonna have fun in this. Okay. Employment change by industry with confidence intervals. August 2025, seasonally adjusted in thousands. 1 month net charge. Okay. Total non-farm, total private. Goods producing. What is it? I'm trying to figure out how to read this graph. Confidence intervals. Oh, minus 100 plus 100. Okay. Employment change. So this is more, I think on the right here there's more employment. Total private. All right. Looks like the private sector's hiring more. Service producing. Services are hiring. Construction. Net sort of construction and manufacturing, these are going down. It's interesting. Information, professional and business services. Oh wow. Okay, wow. A lot of professional and business services not hiring. Yeah, I mean this tells a story. Private education and health services. People are paying for these things. Leisure and hospitality, people are paying for this. All right, I think that's it. I think that's it for today. That was a really broad thing. Please comment if you have anything to say. I look forward to learning from you. I hope you learned from me. And I will